Greetings, members, one and all of the Salivation Nation. As sort of predicted before, whenever we see the prices of gold, sometimes silver, although silver not so much as of late, go up, well, all the analysts come and pile on, and we're seeing that again. But there may be some validity to this. Are we about ready for the next bull run in gold? So this comes to us from taking a look at two different articles here. This is CNBC saying that gold prices could reach fresh 6-year highs thanks to a slew of positive drivers. So it says that gold is glistening. The precious metal has rallied 11% this year, with much of the move occurring in the last several months, as concerns around the slowing global growth and U.S.-China trade tensions took hold among investors. It continued to tick up Wednesday after President Donald Trump said he intended to nominate two dovish candidates to the Federal Reserve's Board of Governors. And there's still room for gold to run, even as far as a 6-year highs, according to Suki Cooper, Executive Director at Precious Metals Research at Standard Chartered Bank. There are a number of macro factors that have turned very positive for gold. And even though we've seen a little bit of a pullback, we think it's actually a healthy correction, she said Tuesday on CNBC's Futures Now, referring to the yellow metals dip in the previous session. And I'll back up to the Federal Reserve, and what Donald Trump wants. I know some members of the community have already talked about this, and there's other analysts as well. And make no mistake, there's been no secret. Donald Trump has definitely been wanting to see these rates cut, and more of a dovish stance. Has even talked about maybe even another round of quantitative easing. Essentially, he wants a weaker dollar. I understand some measures why he wants that, but I don't know. It may be on the point of no return this time, especially if we do another round of quantitative easing. There's a number of macro factors that have turned very positive for gold, even though we've seen a little bit of a pullback, as mentioned here, this correction. There's key drivers of a weaker dollar, falling yields, and the continued uncertainty of potential risk that we might see a widespread recession are spurring investors to turn to gold once again. It's a safe haven asset, Cooper said. With that being said, what will happen to Bitcoin and the cryptocurrencies? They've never really been tested in a recession before. That will be something quite interesting to see. The Fed News and the nomination of International Monetary Fund's Managing Director Christine Lagarde to lead the European Central Bank created an even more bullish environment for gold, Cooper said Wednesday in an email to CNBC. Dovish central banks growing negative yielding debt coupled with the impact of trade protectionism on global growth create a favorable cocktail for a gold upside risk, she wrote. We continue to expect the Fed to cut by 25 basis points in July, that's a quarter point, and then again in December, but the market has started pricing some of the risk much sooner. That's that baked in I was talking about. But the thing is after these last couple of Fed meetings, the prices kind of went crazy up, but it did have that correction that we saw. Something that other analysts had predicted, and I assumed was going to happen too. It was almost too quick that gold went up. Compounding this action is a recent surge in gold ETF inflows, she said. In June, gold-based funds saw their highest inflows since the UK's Brexit vote in 2016. Leading up to this recent rally, investors had very underweight in gold. We started to see that move into speculative positioning, Cooper said. There's still much more room to the upside, particularly when it comes to retail demand. What really ignited gold's 2019 rally were worries around the U.S.-Mexico trade relations, Cooper said. In late May, Trump threatened to slap tariffs on Mexican imports if Mexico did not meet his demands regarding border security. The president later reached an agreement with Mexico to hold off on the tariffs indefinitely. Now, the yet unresolved trade dispute with China, rising tensions in the Middle East, and negative debt yields around the world are also proving a fuel for gold's rally. We think gold prices should see good technical support around 1373, so dips below 1375 look like attractive levels to enter back into the gold market, Cooper said. The second half would likely take the yellow metals to new highs. not seen since 2013, she said. We're expecting gold price to pass $1,400, and it already has, and average $1,450 in the fourth quarter, Cooper said Tuesday, particularly as negative debt around the world has continued to grow. We think that's going to be one of the key major backdrops to continue to support gold prices. Next, we have from Kitco, ripe for the next gold bull run. Can gold retrace its 2013's $1,700 peak? Gold is looking ready to restart its bull run after 5 years of caged trading, which means yellow metal could be looking at retracing its path to 2013's peak of $1,700 an ounce, according to Bloomberg Intelligence. Gold has worthy catalyst for price gains after 5 years of caged trading. It stands to be the primary beneficiary, absent a definitive U.S.-China trade accord that reverses accelerating global declines in sovereign debt yields. The rate cut expectations and increasing stock market volatility, BI senior commodity strategist Mike McGlone said in the July outlook. Gold's breach of the $1,400 an ounce and a surge to 6-year highs has lit a fire under the bull run, which is looking strong at this point, McGlone noted. Gold's 2Q top performer status is set to carry into 2H in our view, he wrote, the second half. Seemingly unstoppable trends in increasing sovereign debt to GDP levels and declining bond yields are gold price supportive. These macro trends tend to reverse. The price of gold did not advance. Sustained trading above $1,410 is a sign of renewed bull run, an indication that 2013's peak of $1,700 an ounce will guide the metal's price target resistance, McGlone pointed out. Gold needs a good reason to not fully retrace the big plunge year of 2013, which peaked at about $1,700 an ounce, significant for ending 12 successive years of gains, with the worst plunge in the past 2 decades. 2013's 28% decline broke back the gold bull. The midpoint of the 2013 range near the $1,440 enhances the resistance zone gold has re-entered, he said. Higher gold prices are the most likely outcome for the second half of the year, with the peak U.S. dollar theory and the Federal Reserve rate cut expectations driving the rally. The foundation for higher gold prices has rarely been stronger. 5 years of consolidation with elevated risk of downside and a dollar that's near multi-decade highs, coincident with similar upside potential in the stock market volatility, supports gold prices. Also, we have the, with the cryptocurrencies, as well out there that kind of should be keep in consideration of all this. Additional backing comes from anticipating Fed easing, McGlone explained. The gold prices continue to see gains. The Asian markets open early on Wednesday with spot gold trading at $1,434. We're going to take a look at the prices here real time. Here, as the recording of this video, we can see that they are down just slightly. $1,418.90 is what we have for gold. Silver's flat at $15.38. Angel Music is further stating that silver is going to remain flat, which means that probably there's not going to be much excitement in it for quite a while. So we'll see, which means that ratio could increase, which means it could be a good buying opportunity. Who knows? Platinum is up $10 to $845, well above the $800 level, and palladium is up $10 exactly at $1,579. It's the king of the 4 precious metals, with rhodium flat at $3,350. Really a non-issue. Rhodium is not really tied to anything. The other 4 precious metals have some connection, but really they couldn't be further apart. All things considered, with the 4 precious metals, they're all almost, to some extent, other than being commodities, are relatively independent of each other at this point. There you have it. There's where things are. So what are your thoughts about gold, the potential to be a gold run? I say that these are two, and I think that's the sentiment, essentially coming from 2 different sources there. However, doesn't necessarily mean it's going to happen. A myriad of different things could occur that could cause it to go the other way, to ease back a bit, and we could see the doldrums of summer, which just a few months ago people were predicting that all summer that gold and silver prices were going to remain relatively stagnant. We've seen exactly the opposite moving ahead here into the just beginning into the summer months there and heading into the July 4th. Post your thoughts below. I would like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, share, comment, and subscribe.